And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all my futures family. It is time for the market prep. Today is Tuesday, March the 28th. As always, our focus is seeking accurate context, good risk management, and remaining patient in our trading today. My name is John Hoagland. Thanks for trusting me with your time this morning. We've already had some economic news come out. Nothing too impactful. More to come. This morning at 7:30, international trade numbers came out. It's a preliminary number. The trade balance, they were looking for minus 91 billion. It came out minus 91.63 billion. Retail inventories also a preliminary number coming out. Wholesale inventories came out just as expected. Retail inventories 0.4% after last month's 0.1%. So nothing too impactful yet this morning, although we are waiting for at 8 o'clock the Case-Shiller FA home price indices, 9 o'clock consumer confidence, and Fed member Barr speaks again today at the House of Representatives. Had a little bit to talk about yesterday. U.S. stocks are kind of drifting here throughout the evening. Looking a little bit lower here this morning so far. Still in the middle of today's data deluge. One of the top feds, the banking supervisor of the Fed, is blaming the SVB collapse, if you want to call it, on bank mismanagement. The Fed member Barr yesterday at the House of Representatives all but dismisses that theory. The FDIC states it's going to cost them $20 billion in losses to recover the SVB case. Crude prices are holding yesterday's rally on suspension of Kurdish exports by Turkey and a suggestion by China of a 6% increase in oil imports into China this year. So a little bit of supply issues, a little bit of demand issues pushing price higher. Currently trading very close to our weekly kickoff high at $73, which was really the target for the move yesterday. We're going to see this in the charts very shortly. The VIX is down from yesterday at this time. Yesterday at this time it was 2144. Now it's 20.8. Higher on the day, but still lower than this time of day yesterday. We've got the dollar index lower, 102.45, still coming off those recent highs. And the yield on the 10-year up slightly this morning at 3.54% when it was 3.48% yesterday. So nothing changing too much here. Again, we're still waiting for some data. And that's kind of the busiest day of data today, although probably not the most impactful, which should be on Thursday when the GDP numbers come out. So we'll have to wait and see how that plays out for us. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. We are going to be having the coach's playbook today. Last week, I got knocked out because of internet. I'm hoping that doesn't happen this time. We're going to be discussing what is your trading environment? Where do you trade? Is there consistency in where you trade? Some of the ideas that I'm sure the coaches will have some things to talk about, including myself. And Good coaching session yesterday. Hopefully you were there and you got your questions answered correctly. Nobody knows everything. I know I certainly don't. And I will usually make sure and tell you if there's a question that I can't answer. So great session yesterday. Today, right after the market prep, we're going to have Make Hogue Money, your opportunity to bring your trade ideas and suggest them, and we'll see if we can't make some money. Yesterday we had a nice little short. We made about $70 in micros yesterday. Pretty good for the last hour of the day, I thought. And we'll see what we can come up with this morning. As always, I am going to say good morning to everybody. We have the rooster crowing early, first one in the room, winning the prize this morning. Shaw, good morning. Timothy, Urban, Cowboy, Haggle Matters, my brother Rick, Randolph. I'm hoping that you're going to be joining us for Make Hogue Money this morning before you drive off to have lunch with our other brother, Tom. I'm going to miss you guys, but I hope you have a good time. Pete, good morning. John, Chris, Bills, Rain, Travis, good morning. Fred, glad you enjoyed it yesterday, Fred. You always have such good questions. And not only are they good questions for you, they're good questions for everybody. All those questions that you send in, that everybody sends in, are questions that other traders probably hadn't thought of yet. So really appreciate all the questions you send in, Fred, and as well as anybody who sends in questions or asks questions during those sessions. We'll be in group coaching again tomorrow at 12:30. Good morning, Sarah Hall. Prayers and love to you. Anissa, Dan Trader, George. Lacey, the center of the universe, is sequestered in the kitchen this morning. Still have some workmen around the house. So she's hanging out with Mom this morning. Dr. VJ, good morning. Will, good morning. Biban, love from Austria. Biban, nice to see you. It's a name I don't think I've seen before. Welcome to the Market Prep. Christopher, Joe, good morning. JT, Grounds Hero, coffee. I've got my coffee, about a half a cup still right here. It's getting a little cool. Gonna have to refill this before we get into Make Hogue Money. That link there is the link to register for the Zoom meeting for Make Hogue Money. You can always watch it on YouTube as well. Data F Trading. Good morning. There's a good chat name for this. Good to see you. Thanks for joining us this morning and saying good morning. Scott saw and he conquered. Robert Harrison. Good morning. Justin, JT. Morning. Randolph. They're saying good morning to you, Rick. As we get closer to Make Hogue Money. I think that's about it. I think it's cool, too, when traders from other countries are here. We get some European, lots of European, some Asian traders, even Australia I've seen in here, some South American as well. So it's always a pleasure to be with everybody and take a look at the charts so we can see if we can't find some accurate context. Good morning, all from Norway. There's Scott from Norway. I was always told that I had Norwegian lineage until one of my brother did ancestry. I don't think that there's much Norwegian in our blood, but always had an affinity for Norway. Good morning to Norway and Austria, and good morning to all of you. Let's jump into the charts so we can be prepared for that 8:20 start for Make Hogue Money, so we can take a look at what's going on before the open. I'm going to start with the daily in the S&Ps, and here we go. All right. So what are we looking at here? To me, this is saying pretty much, I don't know what's going to happen. I don't know where to go. There's a lot of indecision in these charts in the past few days. We've got long shadows on both sides. Yesterday, no exception to that. Volume falling. We did add 19,000 in open interest yesterday, which I do find interesting and kind of a non-directional type of day. We did did close higher, but the regular trading hour session was to the downside. We'll see that in the 30-minute chart here shortly. So what are we looking at here? We're looking at the 200 session moving average is in play for us today. The 100 session at our overnight highs, and the 50 session still holding above that 200 session. So we're looking at higher lows, we're looking at higher highs until recently, where the market seems to be starting to coil and balance and look for new information, using up its ability to facilitate trade. We can see that in the volume here. And, a decent increase in open interest. I'm thinking that open interest is to the downside. We'll see that on the 30-minute chart here as well. We have, so volume, open interest increased on a down regular trading hour day that was delta congruent. We had delta lower on a lower move in the regular trading hour session. This market is starting to look more range bound than any kind of direction. Take a look at the 30-minute chart. Okay, well, let's get these. We're still kind of holding in this channel loosely. We're still inside of it, but when we take a look at this screen, we've got a lot of balance in this screen and on the daily as well. So yesterday we opened here, we closed here. So we did close higher overall, but the regular trading hour session had price kind of pushing to the downside. A late rally did not hold. Settlement is all the way down at 4,007.25. Now it looks like we may be actually opening with a gap to the downside. We gapped higher yesterday. We ended up closing that gap. We have excess on the high from yesterday. We'll see that in the TPO charts here shortly. So, looking at it this morning, I was kind of looking at the idea that we really didn't have any overnight inventory. We may be getting a little bit short in short time frame, weaker hands traders here. Again, this is looking more like balance than anything else. This market is seeking new information. So here's let's look at this without the overnight. So here's our excess on the high yesterday. The IB high of the regular trading hour session. Market continuing to push lower. We had a push to the upside, which did not hold, with negative delta. So we opened here, we closed down here. Delta congruent. Is that longer time frame or shorter time frame? Where the market is, I'm looking at that increase in open interest of possible shorter time frame new shorts coming into the marketplace. We have a weak low, we have an excess high, we have a range bound area, and we have an increase in open interest in the middle of that range bound area. Because the delta is congruent with direction, it leads me to believe that it's probably shorter time frame accumulation of shorts. A whole lot of small traders accumulating shorts, day traders, swing traders, shorter time frame. I think the longer time frame is still pretty much hedged from last week with the FOMC and looking into what's going on with the GDP number again on Thursday. So a lot of folks really just kind of hanging around waiting. Well, short time frame levels are probably going to be what we're going to be looking for today. Take a look at the TPO chart while we're kind of looking at it now. Overnight high, value high. Overnight low, relatively close to the range from yesterday. Let's take a look at this on the chart, the overnight chart here. So this low here is not looking very strong. We did have excess at the high yesterday, but again, not a very strong high because of the location of the previous overnight session here. I think a lot of this is going to be, are we going to open outside the range from yesterday, or are we going to open inside the range from yesterday? Are we going to reaccept range from yesterday, or are we going to deny? Are we going to fail at acceptance of yesterday's range and look lower? We've got plenty of things to look at down below. We've got a naked point of control down here, and there's a few things to look at, but I'm not really thinking that we're going to have any huge ranges today, unless, of course, something unusual happens with the housing price indices or consumer confidence at 9 o'clock. That could be something that could change things drastically. So we'll monitor for that, and we'll be in make hope money when that comes out. Let's take a look at crude oil now. Really kind of stuck here around that weekly kickoff level. Look how important this level looks like. I mean, we had range. We broke out below it. We're back to it now. This is an important inflection level here in crude. Seems a little bit magnetic now, especially because the market has pretty much centered the range from overnight around that level. Open interest indicates short covering, which I firmly believe was what happened yesterday. We lost 22,000 in open interest on an up day. That's usually short covering. The fib, our 50% is relatively close to weekly kickoff level here. 73 is weekly kickoff. This 50% fib level here is 72.69, so we're within about 30 ticks of it. And we're at an important inflection level here. We've got another one here as well. The trend line off the bottom here, which isn't necessarily all that strong. There's only one or two, maybe 3 points of contact on it, but it takes us right up to the 618, which is 74.65. So if we accept back above weekly kickoff high here, this is an obvious target for us. But again, this market is yesterday. I mean, the 30-minute, take a look at it. It was in balance, and then all of a sudden out of balance when that Kurdish news, I guess, came out, and we've got the market direction to the upside and still just stuck around weekly kickoff level here. So we don't really have any overnight inventory with which to look for. We're going to open inside value. Patience, is that what we're going to be looking at? This is one of those situations where the weekly kickoff level may become magnetic, and if you're using it as long above or short below, it'll cut you to ribbons. Look what it did last night. Long above, we couldn't go anywhere. Short above, short below, we got maybe some opportunity, but now we're here back again to long above, back to short below. The market really just chopping traders up in the overnight session here. So be careful. The market has opened in range and in value. There's going to be a trade in this area at some point. When is the question? So take a look at the TPO chart here. This is overnight chop session. What do we have here? Well, we've got a normal variation day. Well, at least we tried to, that moved into a directional day. There is what I'm going to call a late spike down here with a base down at 71.82. 71.82 is the base of this late spike. Is this a late spike? Well, I mean, the market did go from balance to imbalance, accelerating from that point. We're going to be opening above that base, which leads me to believe that price is likely to be accepted at higher levels. Higher levels. Doesn't mean that the market can't come back down here and test into this range and then find buyers there. It's going to be a tough trading day, I think, in crude today because that weekly kickoff 73 is so magnetic to price in the overnight session here. So be careful. How about the NASDAQ? NASDAQ was actually lower yesterday, if you can believe that, right? It was kind of strange. So, again, indecisive, range-bound market state in a much better condition technically than the S&Ps, but still range-bound here. We lost 2,100 in open interest. Long liquidation yesterday, not really a big number. Somewhat inert as far as a change in open interest. Volume slowed here as well. We had volume slow in New York. We had volume slowing in the S&Ps. So the market is really just kind of waiting for new information. Short time frame control. I'm going with that because we are in an area of balance. Here's the 30-minute chart. Look at this area of balance we seem to be in. We do seem to be coiling. We've got higher lows. We've got lower highs. When this market moves, that may be important to us to recognize because it could create a larger opportunity for us when we break out of a trend line along the top here or a trend line along the bottom here. Opening in range and in value with good probability suggests to me to try and stay patient. There's visual targets on both sides of the market. We've got naked POC, and that won't change the fact that we're in a range-bound market state if we stay between them. Here's the TPO chart. Let me go without the overnight session. Yesterday, distribution, different day type yesterday in the NASDAQ than in the S&Ps. We could call this a double distribution trend day where yesterday was a normal variation day in the S&Ps. The market did close lower. Very narrow overnight range. Again, I'm going to be really cautious. Weak lows here. Excess on the high yesterday. Excess on the highs. Weak low yesterday. Weaker low here. Weak low here. Market is telling us in some degree that it's not finishing downside auctions. This market could pull back considerably more, I think, than the S&Ps, which have already been beaten down by banking. There's a lot of, I think, indecision in these markets this week so far. There's a lot of hurry up and wait in these markets so far this week. And it's difficult to really come up with any genius trade ideas because just about anything can and will happen. I'm not getting very clear nuances in most of these markets about anything this week. So I'm going to keep things pretty close to the bone, trade small until something comes to me that says, here's your opportunity. Here's a cheap trade. This one looks good. If I go looking for them, I'm going to find them, and they're probably not going to be that good. So if I patiently wait and just watch, something is going to come to me that's going to say, here's your opportunity. Stay patient in your trading, ladies and gentlemen. Here's gold. Balance, more short time frame control. We lost 5,100 in open interest, long liquidation, lower volume, long liquidation, higher lows, lower highs, coiling, waiting for information. Short time frame control is what I'm thinking we're going to see here into Thursday morning. Look at the gap. Was that short time frame control? It was in the overnight. What about yesterday's range? We lost 5,100 in yesterday's range. Was a lot of that on this push to the downside? It very well might have been if it's short time frame control. So we opened with a gap. It looks like we're on our way to go close the gap. We had overnight inventory to the long side, and with no longer time frame participation to continue to push price higher, we're seeing an inventory adjustment back towards a gap close from today. We've got a previous gap from Friday to Monday. When's that gonna get filled in? TPO chart. Almost a normal trading day. We did take out the initial balance barely on both sides of this market. Normal variation day, extreme. I'm calling it extreme because the TPO point of control is up here. The volume point of control is down here. Here is our attempt to close the gap here. This might be an interesting opportunity for us. But we still have this gap up here. So where are our visual points to look at for opportunities? POCs. We opened between those POCs in a gap. Fred, could this create an opportunity for us to repair this area? It certainly can. We did the right thing. We opened between them, and a move towards these visual naked POCs would make sense. We'll watch and see. Maybe we'll have an opportunity to see what happens today when we do the market reflection. Maybe we can take a look later on and make money to see what's happening here. But it makes sense. Don't know if it's going to happen because, as we all know, anything can and will usually happen. So here's our euro. Again, balance. Makes sense. We've got the dollar off a little bit this morning. The price is moving higher in this area of balance, but volume, we lost 800. Open interest, we lost 800. Volume died. This market is, again, like most of these markets, awaiting news, awaiting some change. Take a look at the 30. Okay, gap higher, overnight inventory long, gap similar to gold. We've now closed up to this level. Are we going to close the gap? We got a naked point of control here. We got another one here. We got another one here. This market is kind of in a random walk here. I'll be watching to see if there's opportunities at any of these extremes. I'm probably going to be, even though the market here is out of balance from yesterday, be patient, let the initial balance establish itself, and focus on the extremes of the initial balance as an opportunity for an execution. I'm going to, again, be very patient. Here's our TPO chart. Normal variation, extreme day with a weak high yesterday. Makes sense. The auction to the upside didn't finish yesterday. We've got a gap, which is a continuation of the move to the upside. But we've got the market kind of looking for a potential pull back on overnight inventory adjustment. Here's the 10-year. Still continuing along this path. We've got 1, 2, maybe 3 points of contact along this. We've got higher highs, higher lows. It is seeming somewhat range bound here now, but it's a kind of a volatile balance, isn't it? Lots of long ranges, lots of long candlesticks. We added 8,800 in open interest yesterday as that new shorts. It's somewhat inert for the amount of open interest that the 10-year holds. Take a look at the 30. So big down move, acceptance of lower pricing. We had head and shoulders here that we've kind of finished before we even opened yesterday. Now we've got a gap lower. We've now closed the gap. We going to accept and range from yesterday, or are we going to reject? Right now it looks like rejection, but I've got to be patient. I have to have good trade location. before I'm going to do anything. Take a look at the TPO chart now. Dead high, weak high, poor low, unfinished downside auction, unfinished upside auction. This market is so full of those, I don't even want to look at it. We're very range bound when we look at all the regular trading hour profiles here. So my focus, as everybody's focus, will be on the visual targets, points of control. Plenty of them are out there. What's natural gas doing now? Looking for a continuation to the downside. Look at this market state. I mean, this is good structure to the downside. We added 8,700 in open interest on the continuation move to the downside. We're still dealing somewhat with rollover, which, by the way, gold still is at the April contract, still has more volume. I know in a lot of platforms they've already pushed everybody onto the June contract, which will probably be there tomorrow or Thursday, where the more volume will be there. But for now, it's a little bit illiquid in the June contract. Back to the euro, or back to the natural gas here. What's the 30 look like? So we closed below that weekly kickoff low. It's been resistant overall in the overnight session. We've opened in range and in value, suggesting patience. And we're right in range, right in value, overnight low. Took out the low from yesterday. Recent lows and recent highs that occur in overnight sessions tend not to hold. The market's probably going to want to look down there in regular trading hours to see if there's any longer time frame opportunities down there. But here we are right in the middle. Well, in range, in value, patience. Patience, patience, patience. I'm for reals. Low volume, tricky range, been having better luck towards the end of the day trades versus jumping in the chop. No doubt. You know, when the market is as indecisive as I believe they are, at least the nuances are so thin that I can't really put a finger on any good kind of hypothesis that I want to look at early in the session today. Better off waiting for that initial balance to establish itself. The range for the first hour of trade has always been a savior, I think, for me, especially as a younger trader having trouble trading the mornings. Waiting till you get some sort of reference in the initial balance helped me a lot. So just definitely stay patient. Bisweed, thanks for pointing out that point of control for the NASDAQ was identical to for yesterday and Friday. And Don, thank you for checking in. And all right, well, we've got just a couple of minutes before we want to get to Make Hogue Money. Let's take our deep breath. Reminding myself to stay humble, grateful, creative, and patient and centered in my trading today. Looking forward to seeing everybody for Make Hogue Money. What else? Oh, yes, of course. Pray for peace. Be kind to yourself. Be kind to others. If I don't see you later, trade well today, and looking forward to seeing you for Make Hogue Money, or how about the Coach's Playbook? We'll see you then. Trade well.